So let's start by looking backwards. How did we get here? If we look back over the last 23 years, you see the market has grown almost 1% over the cycle, but it has been a rocky ride. We had about 3% growth before the global financial crisis. The market contracted by 25% during the crisis, and again, it's been growing 3% since. You also see there's a big difference in the growth rates by a region, with almost 4% in Asia, driven mainly by China. Whereas Europe has been very weak growth and North America has actually contracted. So during this time, Asia has gone from being 14% of the global market to 24%. And if you look at the same for China, I think it's 3 to 20% during that period. I had this written down. It's a big shift right there on the page, from 2 to 17% in China.
Warm welcome to everybody. And we're here today to discuss the performance of global lumber markets or timber markets, the outlook ahead, and how to navigate. And as usual, this webinar is brought to you by Timber Exchange, your partner for tracking global markets, automating your export processes, and streamlining your customer service. And this week's guest is Mr. Glen O'Kelly of O'Kelly Acumen. And now, without further ado, a warm welcome to Mr. Glen O'Kelly. Hello, Glen.
Hello, Amir. Thank you.
Thank you so much for coming.
Yeah, thank you. And thank you, Timber Exchange, for having me here. Thanks, everyone, for joining. My name is Glen O'Kelly. I'm one of the authors of this report we will be discussing today. It's an important topic. I'm sure many of you are feeling the pain of the way the markets are at the moment. Hopefully we can shed some light on the market development and how you can react to these trends. First of all, just let me introduce myself and my business. So O'Kelly Acumen was formed in 2021 with a mission to provide distinctive market insights for the global forest industries. And we focus especially on upstream, so forestry, wood products, bioenergy, and carbon. And there are two things that we offer. One is market reports, such as the report that we did here with Timber Exchange. Another example is one we did recently with RISI on forest carbon markets. And a bit about me. I've worked in the forest industry for about 25 years. I started as growing up on a forest farm in New Zealand, studying forestry science and economics. I worked in the industry before working for McKinsey and Company for about 20 years as an analyst and a consultant, and then as a manager of their global research for basic materials. And I've had the opportunity to work all around the world, from New Zealand to Sweden, but also Indonesia, Chile, South Africa, and the US. So enough about that. Let's get started. Just quickly on the agenda. So I'll be talking about the outlook for global lumber markets, 2022 to 25, our view on that, and also how the sawmill industry can adapt to the challenges it faces. And this should take about 40 minutes, and we'll have 20 minutes at the end for questions. So let's start by looking backwards. How did we get here? If we look back over the last 23 years. So you see the market has grown almost 1% over the cycle, but it has been a rocky ride. We had about 3% growth before the global financial crisis. The market contracted by 25% during the crisis, and again, it's been growing 3% since. You also see there's a big difference in the growth rates by a region, with almost 4% in Asia, driven mainly by China, whereas Europe has been very weak growth and North America has actually contracted. So during this time, Asia has gone from being 14% of the global market to 24%. And if you look at the same for China, I think it's 3 to 20% during that period. I had this written down. Yeah, it's a big shift right there on the page, from 2 to 17% in China. So the growth was very much driven by China. And now we are entering into a new phase this year. We had the COVID spike between 2020 and 2022. So if you think that the last 23 years was a rocky ride, I think this last 3 years has been it's been a wild ride. We had the COVID spike where we had supply chain constraints, coupled with stronger than expected demand for lumber, especially in the US. So we saw this price spike. In Europe, that was combined with the salvage from the bark beetle epidemic, which led to a lot of capacity expansion. Now we're seeing much more challenging markets in terms of demand, prices, and costs. We have a post-COVID correction where the stimulus is being removed, things like stimulus checks, but also monetary policy by central banks is being tighter. The war in Ukraine has led to inflation, and also the trade restrictions on Russia are upsetting trade flows. Because of the inflation, we're now seeing these high interest rates, tighter monetary policy, and we also have some raw material issues in some regions, especially in Central Europe with access to saw logs. And if we look at some of the leading indicators, there is a lot of negative news. I'm sure you've seen it related to lumber demand. When we talk about leading indicators, of course, very important is those related to construction, but also furniture and packaging. What we see, or what I see in the news, is a lot about cooler housing markets everywhere from Korea to Sweden and North America. Seeing less manufacturing. You see a quote here about the factory orders plummeting in Germany, and this is worldwide, and impacts the demand for packaging, such as crates and pallets. And we also see lower consumer spending on things such as furniture. But the news is not all bad. There's some positive news here about a rebound in US home building. And earlier this week, we saw that the US housing starts improved in May by 22% year on year. So it's not all bad news, but there is a clear sort of pattern. And what we did when we did the study was we looked at the forecasts for the key macroeconomic variables, such as GDP, government spending, unemployment, investment, and construction. The numbers here are hidden, but I think you can see the pattern. We can see some regions, sort of the usual suspects, I guess, where you see strong demand, or at least strong macroeconomy, including Latin America, emerging Asia, and Africa, although there are some question marks still about the construction industry, construction sector in China. We see also some that stick out as being weaker, including Canada, Russia, due to the war, Japan, and Oceania. Then some that are mixed, and here I would include the US, Europe, and the Middle East, North Africa, and they happen to be three of the regions that we looked at in some detail with our study together with China. So as I said, we looked in the study at some regions in detail. These were Europe, the US, China, and MENA. And we built demand forecasts based on the most important drivers for lumber, especially construction and GDP. And the results of that analysis, what we see is quite a quick turnaround in demand. In the US, we're expecting demand to reach bottom in 23, grow in 24, and be back at or close to 2021 levels by 2025. At the same time, there's a lot of capacity expansion in the US South, which we expect will grow faster than demand growth, or outweigh demand growth during this period. The situation in Europe is a bit worse. We're expecting a more prolonged and deeper downturn in demand. The numbers here are hidden because you have to get the report to see them. But I can share with you that what we're expecting is up to a 10% decline in demand. We're not expecting growth to return until within this forecast horizon. I think will probably be from 26 onwards. China will fare better as they had a lot of restrictions in China due to the COVID. They're opening up now, so that will have a positive impact on just general GDP, so spending, manufacturing, etc., and construction. Although China is increasingly going to be a market for Russian lumber, which we'll discuss soon. In the Middle East, North Africa, expecting quite sort of a decline and then flat growth. So the economy will stop the bleeding and the patient's condition will stabilize, but we're expecting a return to growth to take some time. And Amir, I'm sure you have some thoughts on this you can share with us.
So the Middle East is quite a large region. It consists of 16 different countries, and all of them have very different economic mindsets is absolutely the strong word. Capabilities is the right word. And because of that, you need to kind of divide the oil markets versus the non-oil markets. But overall, one thing that we can say across the whole region is that housing activity is the main driver. And in some countries, demand for pallets and furniture is also quite complementary. And different countries depend on this less or more. But looking forward, in the medium and long term, the opportunities for major activity and growth is absolutely there due to a very young population. It's in total, the population of the MENA region is more than 300 million, and 50% of it is below the age of 25. And these people, they need to have a job, they need to have a home, their homes need to have chairs, windows, and so on. So the future demand is absolutely there. It's just a question of how the individual governments and economies actually focus and capitalize on these opportunities that they have, especially now that a lot of European countries are focused on nearshoring. And a country like, for example, Egypt, they are really, really good in joinery. So hopefully that's a major opportunity. But right now, inventories are high, prices are low. And if we look at Egypt, for example, in the beginning of the last decade, there were 2 revolutions, unfortunately. And then we were hit by COVID, which of course highly affected the economy, which relies on tourism. And then after that, finally, the COVID bans are lifted and tourists are allowed in. Who are the major tourists that usually come to Egypt? Well, it's Russians, Ukrainians, and Belarusians. And what happened then? There was suddenly a war. So it's been a bit unlucky in that sense, but going forward, the opportunity absolutely exists for strong housing, strong exports, and especially supported by a weak currency.
Thank you, Amir. So for Europe, interest rates are an important reason for the negative outlook that we see. And interest rates were they're raised, I should say, very sharply in 2022 to almost 4% by the European Central Bank in an attempt to reduce inflation. And the rates are expected to be elevated throughout 2024 and into 2025. And this is a survey of professional foresters forecasters, I should say, carried out by the European Commission. And why do they expect it to take so long for these rates to come down? It's because they expect it's going to take time to tame inflation. And what this means for lumber demand is it has a big negative impact. First of all, on construction, with higher costs to finance construction projects. Also, home buyers have to pay more to borrow, and they have less disposable income to spend on new homes or renovations. And also, manufacturing in general is depressed, and I think we're seeing that throughout the EU. The outlook is different for the US, so the consensus among forecasters is that the downturn will be quite short-term. In 2022, housing starts fell by about 3%. In 2023, they're expected to continue to fall. There's quite divergent views on by how much, anything from 4 to 26, but an average of about 17% down. But then the consensus is that growth will return in 2024, and you can see here most surveys expecting housing starts to be back at sort of the pre-dip levels already by 2025. One reason for this is that the US housing sector is considered underbuilt by about 2.5 million homes. So since the Great Recession, well, since 2010 at least, completions were below formations and teardown. So this deficit has built up of about 2.5 million homes that are needed. Let's move a bit to the supply side, and especially the situation in Russia. So Russia used to be the largest exporter globally of softwood lumber as recently as 2021. But because of the war in Ukraine, these trade restrictions were introduced. So import restrictions were introduced by the EU, US, and Japan, and other Western countries. Europe was an important market for Russia, and especially for sawmills in the northwest. So overall in Russia, it was about 17% of exports, and for the northwest, it was somewhere between 40 and 50%. So these sawmills now have to shift those exports to markets that don't have restrictions. And that is proving quite challenging. The other important markets are CIS, MENA, and China. The scope for increasing exports to CIS and MENA is quite low because they're generally smaller markets and they haven't been growing. China, the market or the demand has also been weak the last couple of years, and the logistics are quite challenging, especially from the northwest of Russia. So it's a long sea route from St. Petersburg all the way around to China. Alternatively, a route overland, which is quite common. But even with subsidies from China for using the Silk Road and the rail, this is proving to be barely economical for sawmills in the northwest to deliver to Shanghai with the prices we see. On top of that, we have the restrictions that are being placed on Russia's access to equipment, both for logging and for sawmills, which will start to be felt more and more as this equipment needs to be replaced. And on top of that, we have the political turmoil that we've seen over the weekend, which I heard already is having a negative impact, or expected at least to have a negative impact on the economy in Russia, just the uncertainty around that. So the implications is that the Russian sawmill industry will contract over the next few years. Production will shift towards the east, where it's better positioned to serve China, and Russia in general will focus more on China. This also means that China will become more competitive for other exporters to China, such as the Europeans and Canadians. If we look around globally, we expect supply to be flat to declining in most regions within 2023 to 25. Contraction in Russia for the reasons we just discussed. Also in Central Europe, largely because of the bark beetle. So the salvage is winding down, and there's also lingering effects of the amount of harvesting that took place over the last 5 years. A lot of growth that was taken out in advance in order to, it was damaged or in order to restrict the spread of the bark beetle epidemic. Canada, we're also expecting to decline. I mean, this has been ongoing, but it's especially in British Columbia where there have been harvest restrictions, partly also because of the mountain pine beetle in the early 2000s. More recently, the impact of the fires, and simply that it's also simply because it's they have quite poor economics currently, the sawmills in BC, in terms of the margins they get given the logs and the log prices. In most of the rest of the world, we expect flat supply growth, since demand is anyway going to be weak. Demand and prices will be weak, and the only region we expect strong growth is in the US South. And a lot of this is already announced. So there's more than 5 million cubic meters of capacity expansion announced. It's about a 10% increase. That's including both brownfield and greenfield expansions. And this is because the US South has low and stable sawlog prices. The harvesting degree remains low. It's been low since the Great Recession, about 65% of growth is taken out. And also a lot of the other costs in the region are competitive on a global scale. So that's why a lot of investment is taking place there. This is challenging for Europe then to increase export in the US for the next couple of years, but I think it's this will pass. I mean, given the less volumes from Canada, there is definitely a role to play for Europeans or European lumber in the US market, and it's important that European exporters maintain their presence in the market in terms of the relationships, logistics systems, producing those specifications so that you're there when US demand really starts to grow again and the European lumber is needed. Just so, in summary, we see many challenges. First of all, we see weaker demand, especially in Europe and Middle East, North Africa, in the US this year, but quite temporarily. And this is a normal cyclical dynamic, but it's of course it's painful, especially after the good times we've had in the last few years, and it will be challenging, especially for those regions that have grown a lot of capacity during that period. We also expect cost inflation. A lot of this has happened already, related to the war in Ukraine, the impact on energy, general inflation on labor. Now with the high interest rates means higher capital costs as well. And in some regions, we're seeing high sawlog costs. I just mentioned British Columbia, the margin pressure there, but also I think in Central Europe currently with still high sawlog prices and difficult availability of sawlogs. A third big challenge is the price correction. So coming down from those COVID levels, I think still higher than historical levels, but and also because of the cost that's sort of underlying those prices. Nonetheless, it's having a big strain on margins for sawmills. And finally, sawmills have to adjust to changing new trade patterns. So for Europe, it means even more Russian competition in China. Also, the impacts for buyers, at least in Europe, of less supply from Russia, Belarus, and Ukraine impacts the ability for Europe to export, for example. And in the US, the loss of this volume from Canada and really needing this capacity expansion we're expecting in the US South, eventually also more import from Europe. We need new strategies to succeed in the next few years, given these challenges we are seeing. And these are some of the strategies we see sawmill businesses doing to adjust to the new market environment. I think for many of you, it's nothing new, but sort of a synthesis of what we see. The first is to focus on cost efficiency rather than growth, of course. The focus really on maintaining those margins. And a lot of it is about efficiency in yield, labor, and energy. And a lot of the time it is being done using new digital technology to achieve that. So log scanning, optimized cutting patterns, digital inventory systems, automation, all these things. Also, scale is a way to achieve that, of course. Second big bucket is supply management. And at a mill level, it's about cutting back the number of shifts, which compared to a lot of industries like the pulp industry, for a sawmill, that can actually have a positive impact on your cost if you take away your most expensive shift. Also has a good impact on the demand-supply balance for sawlogs in your local region. At an industry level, it's about consolidation. So accelerating this trend that has been going on for decades, where we're going towards fewer, larger sawmills. So getting back to the point about scale. So we're expecting a lot of consolidation. Thirdly, market diversification. So just finding those pockets of growth, whether it's different geographies or product niches where we see growth. Finally, it's perhaps not as interesting, but I think it's important, is the channel strategy. So one point here is that the demand mix will be different in the next few years with less construction, probably more in packaging and furniture, more DIY than the normal sort of housing starts. So that means you need to adapt to what kind of channels you're using to serve those markets where the growth will be stronger. Secondly, again, focusing on margins, not volume. So often that means using more of your direct channels, more direct route to the end customer. So where you have scale to do this, it means more of your own direct sales if you have your own distribution. Also bypassing distributors and going straight to the wholesalers and retailers directly. Again, if you have the scale to do that, I know it's difficult to get qualified to serving those players, but that's the holy grail. So just close off with a quick word about this report that this material has come from. So it was released last week. It was a collaboration between O'Kelly Acumen, my business, and Timber Exchange. We've been working on it over the last couple of months. It looks at global softwood markets between 2023 to 25, and also a bit sort of more speculative beyond 2025. It's a global perspective, but we focus on 4 regions in particular. So the US, China, Europe, and MENA. And it covers demand, both forecast and both historical and forecast, supply, trade, and touches on the supply chain issues that are important and how these markets will evolve, such as sawlog supply and the logistics.
It's a very good summary indeed, and it's extremely analytical, something that really impressed me, and I've seen your previous reports as well. And you really take into consideration when writing this report both the qualitative and the quantitative, and listen to what the industry is saying, listening to different perspectives. So it really is a report that includes the key data, the opinions, and the forecasts, which is very well organized and structured, which is definitely of benefit to any sawmill that is working globally and or exposed to global markets, which I assume is the majority of speakers or listeners on this webinar.
Thank you. And if you're interested to hear more about the report, please just reach out to myself or to Amir. You're very welcome to take any questions and discuss whether it could be something that's interesting for you. And if you want to order it, you can see the link there. Now, just like to welcome any questions.
From Pavel, he's wondering, thank you very much for the detailed forecast. What do you think, how big of a reduction in sawn timber production we will await from Sweden and Finland producers during 2023 and 2024?
I don't think it will be a big reduction in the Nordics, in Sweden and Finland, if any. Yes, the demand is going to be weaker in Europe, but that's mostly going to be equivalent to the reduction in capacity in Central Europe because of this issue with sawlog supply. So I think Nordics are relatively well positioned to maintain production. And of course, a lot of the stakeholders in the industry in Nordics have different motives. They have motives to keep those sawmills running. There may be pulp and paper companies that want the chips. It can be forest owners that own the sawmills, and they need that for the sawlog demand. So I think it's a bit more resilient to some of these pressures than independent sawmills. That said, I expect there will be a smaller margins for sure. We've seen that in the past in market downturns, even in the Nordics, that it is poor margins. It's just that many of the owners have different reasons for running the sawmills.
The next question is from Nikki. Thank you, great report. Can you please share your thoughts on sawmilling activity in BC?
Yes, thanks for the question, Nikki. I'm not an expert on BC. I think we have Russ Taylor perhaps on the call, and he would be better placed to field those questions. But my amateur understanding is that the key challenge for sawmills in British Columbia is access to sawlogs. So the province of British Columbia decides what the annual allowable cut is, and it's quite a political question, taking consideration of many different stakeholders, including Indigenous peoples, also public pressure to preserve old growth forests. And the price setting mechanism for the sawlogs is not, I believe it's market based, but it can be quite a lag. So I think currently the pricing for the sawlogs is a little bit out of sync with the prices for the lumber. So that's one of the challenges that BC has just now. But I think long-term structurally, the issue is how much saw logs can you get from the forests in British Columbia to support a sawmill industry.
The next question is from Gabriel. What specific market do you believe will push more US demand for 2023, 2024? Packaging, pallets, construction, or furniture?
Yeah, so we have a forecast by segment in the report, so I don't want to give too much away, but I think I've clearly said already that the big dynamic, most important dynamic in 23, 24 in the US is the decline in housing starts, and that has a big impact on construction. So that's the one that's going to take the biggest hit. I think the other segments are a bit more less sensitive to well, they're less volatile, certainly. Packaging and pallets, this is related to manufacturing. We don't see the same dip at all in manufacturing in the US. And similarly, we don't see a big impact on consumer spending on things like furniture. So it really is a story about housing starts and construction.
Thank you, Gabriel, for that question. The next question is from Yako. Hello, Yako. Good to see you. He is wondering, I guess Japan still have no official restrictions to import lumber from Russia. At least they didn't have during 2022. Maybe starting from 2023, they have. Is this something that you have heard, Glenn?
I don't know. I don't have a definitive answer. My understanding was that Japan was in the same group of Western countries that placed these import restrictions on Russia as a result of the war in Ukraine. So together with Korea and the US and the EU. But I may be wrong.
I don't track the Japanese market, but I do hear and see things every now and then. And I know that until recently, they were actually importing Russian lumber. But if something has changed in the past months, then I have not maybe heard of it.
I can say I've done interviews with Japanese lumber buyers in the past, and I know that they're not overly fond of Russian lumber in general because of the issues with delivery times, things being on time and spec, these issues, and prefer more reliable partners for sourcing their lumber.
How many pages is the report total?
It's about 110 pages. Yep, it's a big report. I think since we go into the 4 regions in detail, it inflates the size of the report. But I think it's also valuable since the outlook is so different for these different regions. We've really seen that.
What made you want to write the report on this topic specifically?
I think we had some discussions towards the end of last year, right? We saw winds changing and going from a period where it was great times for the sawmill industry to suddenly some big question marks about growth, and this an inflection point, I guess you could say, in terms of going from growing strong growth in demand, strong prices, to the opposite, as well as this cost pressure. So we felt like this is an important topic to understand better.
And I think we went from a time or era of absolute certainty that prices would never, or the market environment would never drop. And then suddenly overnight, it became a nightmare, essentially, with higher interest rates, war, supply chain disruptions, everything that could go wrong essentially happened. And I think, or at least for myself, that's why I felt that this report is so needed, because the markets are truly global and they're so interconnected. And this situation in Ukraine really changes the global map on how existing trade flows are performing or their routes. And because of that, there are so many direct and indirect consequences, and nobody can keep up with all these changes. So I thought it's a perfect time actually to do this report. And that's why we at Timber Exchange were so happy to support you with all of our unique data that tracks production levels, inventory levels, consumption levels, and trade flows. That is quite neatly organized, and I hope you had an easy time using it.
I did. It's a great platform. Thank you. Meanwhile, we have a couple of questions coming in.
Yes, we have another question from Abdelila. Thank you for your insights. We feel a slight US demand recovery. Would that have an impact on prices in 23, 24?
Yeah, I definitely agree on the demand comment. It's notoriously difficult to forecast prices, and we didn't actually do that in this report. But I think normally you would expect with stronger demand for prices also to improve. And if we look at some of the demand supply fundamentals, so if demand is indeed recovering, the US doesn't have the same supply from Canada as previously, a lot more restricted imports from British Columbia especially, and also there will be less ability to plug the gaps with imports from Europe, given the supply challenges that Europe has. And really the only ways to do that would be to raise the price, to lock or entice some of that lumber out of Europe into the US market. So yeah, I would expect stronger demand to mean stronger prices in the US.
Yes, the US is really a market where supply demand really dictates the prices. And one of our previous speakers this year said that he expects that the market will be oversupplied. But as curtailments are happening consequently, and as maybe Europe disappears for part or most of the year, so certain countries, depending on the cost structure and the price in the US, this can of course have an effect. Of course, combined with forest fires, logistics problems, and maybe even strikes. Next question is from Luca. How do you see log price development in the near future?
Yeah, this log prices are regional, so it's really different if you're talking about most logs are sourced within 100 kilometers, so it can be at that sort of granularity when you're talking about log markets. By the name, look, I don't know if you're from Eastern Europe, Czech Republic, Slovakia. In that region, I think we are expecting higher prices for logs just because of the reduced availability, or at least continued high prices for the saw logs. I don't think they're going to fall at the same rate as lumber prices, and that is the challenge for sawmills in the region. Oh, sorry, Luca, you've written Central Europe. Yeah, okay. Well, my answer holds then.
The next question is from Rajiv. Though the Indian region is not covered in the report, do you have any insights on the Indian timber market, how it's going to pan out over the next 2 years?
Yeah, I don't have a lot of deep insights on the Indian market, to be honest. And Amir, you probably know more than I do. But I think this slower economic growth we're seeing that everywhere. So I'd expect it to cool down a bit in India, but not at all to the same extent as we're seeing in developed markets. So still growth, still construction, just a weaker growth. I am not even sure where India is sourcing its lumber. I'm guessing it's Nordics and Australasia. Yeah, it could be more coming from those regions, as it's more difficult to export to China. I mean, the competition in China from Russian exports could push some of those exporters out and look for markets such as India.
India is a very interesting market, actually, because I'm certain that it is the next China, and there's huge economic growth, and they're adding trillions to their GDP or $1 trillion to their GDP every couple of years. The last $1 trillion to be added took only 5 years or 8 years, I believe. So it's growing at an immense speed. And there is a huge growing middle class in India, which is supporting this economic development and housing and furniture and pallets and everything that wood is used for. But looking at the lumber market in India currently, it's dominated by the Central Europeans, mainly the Germans, who are quite competitive in price. I know that Swedes and Finns want to come in. I know that Russian companies are interested to enter and diversify, but the logistics just make it impossible, because the few containers that are available with Russian or Indian shipping lines, they are taking high value goods, and timber is simply too big and too heavy and too clunky to ship. But India is very interesting because it's also not only a lumber market, but it also imports quite a lot of logs. So the lumber price competes directly with log prices from mainly Uruguay and Australia and New Zealand. So it's really a question of mathematics in the end. And when log prices become too expensive, then they turn to lumber, and most companies in India actually do a bit of both. And they simply shift depending on the market circumstance. So to answer Mr. Rajiv's question, over the coming 2 years, it's maybe a little bit short, but over the medium term, it will be a bigger market and a more competitive market, absolutely. But in the medium term, it's determined by how are Central Europeans and Scandinavians performing, and do they need to diversify more or less, but also about trade policy when it comes to exporting logs. More and more countries are less favorable towards that, and because they want to produce these things domestically within their countries. So that is something certainly that's very, very important to track. We have a new question from Mr. Intar. I would like to hear your comment on raw materials, sawn log, etc., future availability on regionally based increased activities coming from greens, etc. For example, in Latvia, Baltics, complete spruce logging banned this year for 6 months in a row from April. This leaves sawmills quite challenged, while also export markets face slowdown in demand. At the same time, activities for Scandinavian pulp mills setting pulp log records in Baltics, whilst in domestic markets they have been 50% lower. This has resulted in that Latvia log prices are unreasonably high and volatile. There have already been announcements of reduction production capacities in Baltics due to eroded profitability of business.
Yeah, no, Baltics has definitely had a tough time the last 12, 18 months. The prices for logs, both pulp logs and saw logs, has risen basically to the Nordic level, to Swedish and Finnish level and beyond, which is really unprecedented. And I don't think it's sustainable either for the prices to be at that level. I think it's reasonable to expect the whole Baltic Sea market to become harmonized. So one common price, or at least moving together throughout the Baltic Sea region. But for it to be higher in the Baltics than Sweden and Finland is not sustainable. I think one of the main drivers for that was the war in Ukraine, leading to a shortage of natural gas throughout Europe, which in turn led to a lot of demand for wood as a fuel for heating. And this created competition, not just for the typical fuel wood grades that would be normally used for those purposes, but also for the lower grades of pulp, and in some cases, saw logs. You know, that Estonia was exporting enormous volumes of chips to Denmark, for example, for energy. But we see that unwinding, with Europe seeming to solve the issue with gas availability. So that whole issue around competition for energy wood seems to be resolving itself. And I think you'll see a change in the trade also within the Baltics. It doesn't make sense to go and source pulp logs and saw logs in the Baltics for use in Finland and Sweden if it's more expensive there. So that will be something that needs to unwind. And then there'll be an adjustment in the demand too. I think Stora Enso announced last week or earlier this week they're closing a sawmill in the Baltic region. So that's another thing that will happen. So I think, long answer short, I think Baltic prices have to come down, but we should expect them to be at Nordic levels moving forward.
And that's really one of the complications, because there are so many stakeholders, the market is so public, or is so large as well, that, for example, some forest owners might feel that they didn't get their fair share during the past few years, and now when actually the market has gone down, instead of actually harvesting the logs and selling them, they just let them stand and say, "Oh, we'll sell them when the price improves." So sawmills that maybe don't own their own forest are in a very tough place, regardless of where that sawmill actually is. But one previous speaker said in this webinar series that it's maybe right now temporarily we are at back to old prices, but going forward, all prices have to come up so that we can all live with the new economic reality and the new cost structure. There will be curtailments, there will be discounts, there will be flash deals happening, but going forward, the price structure, the sale price has to support the current cost structure. Otherwise, it's not a business and there's no use having that business open. So in time, it will happen. The only question is when, because we've essentially gone through a major earthquake with all these trade shifts happening, and it's going to take a lot of time for things to settle down and stabilize. And I believe that was the last question of this during the Q&A session. Glenn, how do people contact you or purchase the report if they're interested?
Yes, I think we can distribute my email address, but you can just visit my webpage, which is www.okelly.se, and you can read more about how to contact me about this report and any other questions you have, and very happy to hear from you.
I'll show your contact details and website on the screen right now, actually. Glenn, thank you so much for joining us. Thank you for writing this report. Thank you so much for sharing your very unique insights and helping and putting it all together into a comprehensive story that actually makes sense and that considers all the factors. I know that it hasn't been an easy job, but it's really, really impressive. And I want to personally say well done, because I've myself been writing reports for a long time, absolutely not in the 100-page range, but I know that what the effort has gone in and your significant experience. So thank you so much for writing the report, and thank you for coming on the webinar. And let's jump on another webinar in a year's time and look forward from there.
Thank you, Amir. It's been a pleasure, and I hope this was useful for you all. And yeah, as I said, we'll be very happy to hear from you.
Thank you, Glenn, and thank you so much to the audience as well. This was our last webinar for this season, and we hope to come back mid-August or at latest end of August. And we will be interviewing furniture manufacturers, sawmills, importers, and leading companies and analysts from around the world. Thank you so much for joining and helping us break so many viewership and audience records. We really, really appreciate it. And until next time, and everyone have a great summer. Thank you very much. Bye-bye.